Okay, guys, so in this video, I'm going to be speaking a little bit more in depth about TradingView and what is actually going on your screen, the tools that you use, the numbers, etc. Okay, so this is Euro USD. Okay, this is Euro USD. On the right-hand side, you have a bunch of numbers, 1.65, 1.6, 1.55, 1.5, 1.45, etc., etc., etc. These numbers simply mean the value of the currency. So for €1, how many dollars would you get? Okay, so right now, the current price is here. You see the gray box right now, and there's a timer underneath it. You can see it's ticking down from 27, 26, 25, 24, okay? Where the very thin line is here, okay, that is the current price if you were to exchange €1 into $1.
And I also wanted to add that if you're trading gold, the numbers on the side simply mean how much it is currently to buy an ounce of gold. So the numbers that you see on the side, they will always fluctuate, and that will be the current price if you wanted to buy 1 ounce of gold. So if gold is at 18.55, that means 1 ounce of gold is worth $1,855. If gold is at 1700, that means 1 ounce of gold is worth 1,700. And if you're trading stock indices like Nasdaq or US 30, the stock market numbers basically refer to the value of stocks or what they're trading at. This is the cost for one share of a stock. If Nasdaq is at 12000, that means that is the value of the share right now. Okay, hope that makes sense.
So if I was to have €1 right now and I was to exchange into $1, for €1, I would get 1.07259 cents. So I was get $1 and $0.7255 cents right now. That is simply what the numbers on the side mean. On the bottom, you can see the years. Okay, you can see a timeline, you can see data of many years. And if you scroll all the way back, okay, right now it's not really loading, but it takes us as far back as 2002. Okay, 2002, because I believe that's when trading was digitalized. Before, you actually had to go into the exchanges and place trades manually. You had to do it on a sheet of paper. Okay, but now as technology evolved with the internet, etc., it was moved online. Okay, so that's all the numbers on the side mean. So in 2003, the value of Euro USD was at 0.89451. In 2005, the price went up to a high point of 1.36351, etc., etc., etc. You get the gist, right? And now this is one thing I want you guys to understand, okay? And we're going to speak about this in a later topic called market structure. Whatever price has done in the past, it's always going to do again. Why? Because history repeats itself. Okay, so that is what the numbers on the side mean and the years at the bottom mean. Okay, now let's go on to the top. Okay, so if I click this button over here, that would be the same as the watch list, right? Okay, if I click here, I can search more assets that I want to trade, more industries. If I now click here where it says M, this is now called your time frame list, basically your list of different time frames. Okay, so over here is 1 month, 1 week, 3 days, 1 day, 15 hours, and you can choose to add what you like, but I would recommend just having you just have the default settings that are already there. Some of them are added extra because I have a pro account, but you don't have to have this right now. Just stick with the simple ones. It will do the job for now, okay, until you understand trading a little bit more. Okay, so what this simply means is, sorry, before I get into that, over here is the candles, okay? So if you guys don't know, we trade candles, okay? So if I was to click bars, for example, you can see what would happen, right? If I were to click hollow candles, you can see what would happen. If I were to click lines, you can see it would be a line graph. It's the same information, just conveyed differently, okay? With the base, this is the area format, baseline, Heikin-Ashi, Renko, and there's a bunch of different methods, right? You don't need to use all of these. We use Japanese candlesticks, which is just candles, okay? So we go back to candles, and simply now going back to the time frames, if you are on the 1 month, if you selected 1 month, okay, that means you are now on the monthly time frame. Okay, you're going to hear me say time frame a lot. All that means is you are now on the monthly time frame. So over here, each candle, we call these candles, right? Each candle represents 1 month. Why? Because we are on the monthly time frame. So these candles might seem like they're a lot bigger, they're a lot neater, they're a lot smoother, they look a lot easier to read. Okay, why? Because it's 1 month of data compressed into one candle. That's why we call it the monthly time frame. So each and every bar that you see over here, each and every candle, camera's still moving here. Each and every candle that you see here represents 1 month. So now if you go to the weekly time frame, we change from 1 month to 1 week. Now each candle represents 1 week's worth of movement, 1 week's worth of volume in the market. So now we can see this past week what happened. We were bullish. Last week was bullish, right? Remember those terminologies, guys? Okay, we're using them now. So last week was bullish. Why? Because you can see here on a weekly time frame, the previous week closed as a bullish candle. It was going up. Okay, and you guys get the gist. You scroll down to the daily time frame. It's now every day's data compiled into one candle. So this is 1 day, this is 2 days, this is 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days. And now you go down to the, let's say, the 4-hour time frame. Now this is what's happening every 4 hours. 4 hours, 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 4 hours. You guys get the gist, and so on and so forth. 1 hour, and then the 30 minute, okay, etc., etc. You guys get it, and it goes to 5 minutes, and it goes to 1 minute, and it goes to seconds. But I don't use seconds, okay. I just use the higher time frames, okay. When we say higher time frames, I'm usually referring to weekly, monthly, H4, and the H1, okay. And then for entries, I'll go on the lower time frames, and we're gonna get into those later on. So don't worry, guys. Yeah, okay. So that is how to read what is on your chart in terms of what the tools mean, etc. Indicators, people use indicators like moving averages, for example. That is retail trading, and we're not going to use that. The only retail method that we might use for extra confirmation for our trades later on will be the Fibonacci, but we don't really use it like that. Sorry, we're just going to use it to, you know, identify if our analysis is even more correct, if we have extra confidence in our analysis, basically. Okay, so we're just going to use the Fibonacci to kind of add extra confirmation to our original analysis. But over here, people use stuff like the moving average, okay? I've actually got it added on, but I've taken it off because I used to use it last year when I was retail trading, okay? So EMA is called the exponential moving average. And what this is basically just a line, okay? If I double click it, this is a moving average. There's something called SMAs, which is another moving average. And simply, these basically act like a moving support and resistance. We're going to get into it later on. So retail traders, what they use these indicators to enter the market and get out of the market. And there's something called a moving average crossover. For example, in this instance here, if I scroll down to the 15-minute time frame, whenever the red crosses over the blue, whenever the red line crosses over the blue line, retail traders sell. And whenever the blue, in this case, as you can see, whenever the blue crosses over the red, retail traders buy in the market. It will give them profit for some time. It will show them some profit, but later on, their stop losses are going to get hit and they won't come out profitable long term unless they have a solid strategy. Don't get me wrong. I'm not saying retail trading doesn't work. Retail trading does work. You just have to be very disciplined in how you trade. And overall, it's not the best of methods to trade, because that's how, like, we know the market movers are the large corporations, the banks, people that have a lot, billions and millions and millions, hundreds of millions of dollars in money, right? So if they know that 95% of traders are doing the same thing and trading the same way, the market needs liquidity to move. Then they're only going to capitalize on that. Why? Because it's a dog-eat-dog world, and they don't want retail traders, people like me and you, to make money, which is why we don't trade the retail method. So we are going to take off all of these indicators. We're not going to use any indicators. Okay. So on the side here, what do you have? Okay. On the side here, you just have your form of, clicking and maneuvering and hovering around. You can either use a crosshair, you can use a dot, or you can use an arrow, or you can use an eraser. I like the cross. Okay. That's just what I use. Even though I'm a Muslim, I like using the cross. But over here, we have trend lines. So what we're really going to be using the most out of all of these are trend lines, mostly trend lines, and sometimes horizontal lines or horizontal rays. We're not really going to use anything else over here because you just don't need it. So when you click trend line, okay, that's all you're going to do. You're going to click this, Trend line. Sometimes the default settings might be different. So I'm going to double click and you guys can just copy my trend line setting. So over here, it's on gray, 100%. Thickness is very small. Text, no text. Coordinates. The coordinates are just whatever. You don't need to touch any coordinates right now. But that's basically how to use the trend line tool. Okay. You can use the trend line tool anyway. If you want to make the trend line tool straight, all you've got to do is hold shift, click, and drag. It'll become absolutely straight. Okay. If you want to draw it like a line of best fit or however, you can just draw it from the top and draw it from the angle, however you like. Okay. That's the trend line. Next up is the toolbar over here where you have different methods of analysis and different tools you can use to analyze. We don't use any of them apart from the Fibonacci. Okay, Fibonacci. We're going to make a separate video on the Fibonacci. Okay, so we're not going to use anything else here. You have your brush, you have your highlighter, etc. These are just different things that we can use to analyze the chart. So rectangle is something that we're going to be using a lot. So rectangle, this is my default rectangle settings. You guys can copy it if you like. All you got to do is just basically choose a color. My opacity is at 23. No border, and yeah, that's about it. So you got rectangle, that's something we're going to use a lot. Circle is something I like to use a lot. I like to click in the middle, hover around it, creates a circle. Okay. Something else that I like to use is a highlight. Sometimes I might use a highlight to make a point. Okay, so I'll highlight here, and I can just double click that, I believe, or right click that. Yes, double click that. Once you're done, you can change the color. Okay, change the color, yellow. You can make it brighter, however you like. Okay. Yeah, you can do that however you like. So let me just delete that now. Something else I like to use is the money sign. So over here, I like to use the money sign. Why? Because later on we speak about topics like liquidity and money and market structure, etc. We're going to be using this to remind ourselves where there's liquidity in the market. Don't worry, it's all gibberish to you right now. You guys know me every single step of the way. I've taken you so far. We're learning bit by bit, right? So once you're ready, I'm going to teach you guys that. But don't worry. Okay, so over here, what did we say? The terminology, remember we spoke about long, short, bullish, bearish. Whenever you enter a buy, obviously this is trading view. You can have a trading view broker, but we're not going to do that. But whenever you want to buy, remember guys, we only use trading view to analyze and we execute the trades on our phones, right? So whenever you want to buy, you click long. Okay, so you click long, the long position. Say for example, I want to get in at this price right here. I click long just to look at it. Okay. Anything. Okay, so for you guys right now, once you click this, I hope you guys are following along, by the way, and you're doing this on your laptops. Okay. Once you guys click this, yours is going to be green and red. Okay, I want you guys to double click it and change it from green and red. Change the stock color to gray, make the opacity 15, and change the target color to light blue and make the opacity 11. Okay, there's psychology behind it. Don't worry, guys. I do this all for a reason. Okay, because whenever you see red, you panic, and I don't want you guys to be panicking in the market. Okay, so I'm just delete that. Sorry. So let's say, for example, you enter the trade here. The box at the bottom, the black box, that's your stop loss. Okay, that is your stop loss. So before you enter a trade now, say for example, you analyze the chart and you're about to enter a trade on your phone, you use your long tool, okay, or your long position or your short position. You use those tools, right? So you use those tools right there. The bottom from the line in the middle is your entry point. That is where you enter the trade. That is the price you entered the trade. The line at the bottom is your stop loss, meaning what? If the price comes down below the bottom point of below the box over here, the lowest point of your box, right here, the end of your box, that means you've now lost the trade. The trade has hit your stop loss because that's where your stop loss is. Okay. And the take profit would be high. Okay. If you're in a buy, so the take profit will be up. Remember we spoke about that briefly previously. Okay. So now, what this means is if the trade, now you're going to see me using my tool, okay, my brush. Now, because the trade has gone up here, if it hits this point here, the end of my long position tool, that means I've now won the trade. So the trade will close, not on trading view, but that means I've now won the trade. Whereas if the trade now comes down and stops right here, that means I've lost the trade and my stop loss has been hit. I've lost money. Why? Because it's hit my stop loss. That's simply all that tool is for. And the opposite way is shorting. So if I want to sell the market now, what I've got to do is click short position, Where do I want to enter the market from? Let's say I want to enter the market from here. I click the tool. I click the exact price that I want to enter at, where the price is. Okay. Okay, no, let me replay it for you furthermore. Let me just use a replay. So now say for example, I want to sell the market. Okay. I want to sell the market. Okay. Say for example, I now want to sell the market. So the moment the market comes into this area, this is my price of interest. We call this a POI. We're gonna speak about POIs later on in the course. As soon as the market taps into here, I want to sell the market. Now let's play it. This is called bar replay mode. On my account settings, I have a bar replay mode, which is basically like a mock test. So you can revise the markets. We call it back testing. So back testing is very, very, very important. And that's a whole nother topic on the course as well. We're going to get to. So that's what I'm doing right now. I'm in bar replay mode. So as soon as the market touches this blue box right here that I've marked out, my area of interest, I'm going to enter the market. Okay, boom, it's touched it. So I'm going to sell the market from here, and I'm going to put my stop loss above here. Okay, so now let's say my take profit, I want to put my take profit down here. I want to put my take profit down here. For example, guys, this is just an example. This is not how I trade or how anybody trades. It's just to make an example. Over here, you can see the middle line is my entry, which was at 1.0512. Sorry, 1.0519. And my stop loss is at 1.0584. It's going to be highlighted on the right hand side here. Okay, that's my stop loss, and my take profit is the one in blue, 1.07284. This is the price points that I'm entering the market and I'm exiting the market. And if I want to find out more about exactly what my entry is, I just double click this tool, and that's it. It tells me my entry price, my profit level, my price. So now say for example, I wanted to make my take profit all the way down here, for example, yeah, down here. I don't have to drag it like this. All I've got to basically do is I can just look here and say, you know what? I want to exit Euro USD when the price reaches 0.7220. So pay attention now. My take profit is right here, right? Watch how it's instantly going to move here to 1.07220. All I've got to do is double click. And where it says profit level, all I've got to do is change it 1.07220. Now, before I click enter, what happens when I click enter? Boom. You see, it just automatically adjusts. And now your job is, when you execute the trades on MetaTrader, the app, you just put in the same levels as this. So once you buy or sell, you put your stop loss, you look at your trading view, you say, okay, so my stop loss is here on trading view. What number is it? 1.07854. So I'm entering the trade. I'll put it at 1.07. So let me show you guys live actually. Okay, so now we're here on Euro USD. Let's say now I'm selling Euro USD, right? So I say my stop loss is going to be at 1.07854. 1.07584. 1.07584. And my take profit is at 1.07220. 1.07220. So I now enter the trade by clicking sell. I'm now in that trade. Do you see? That is as simple as it is, guys. Okay. If the trade hits my take profit, I've now made money. So let's play it out. It's going to hit my take profit. Wait for it. Boom. Out the trade. It's hit my take profit. I've made money now. Now I can delete this tool because I'm out of the trade. Or you can keep it there to look back at and journal. And journaling is very important, guys. Keep track of every trade that you take notes on it, analyze why you made a mistake, if you made a mistake, etc. And we're going to get into that later on in the course, so don't worry. But that is how to use the long and short tool. Something else I like to use is the price range tool, right? This simply tells you how many pips has it moved up, how many pips has it moved down. If you don't want to calculate it in a decimal point format, or you don't want to do it off the top of your head, all you got to do is click wherever you've entered. For example, say I've entered at the top here and hit my take profit down here. Okay, that was 25 pips. It was a 25 pip move that I secured. So I caught 25 pips on Euro USD. Okay, and let's say now when you're calculating your risk to reward, your stop loss has to be smaller than your take profit. Your stop loss always has to be smaller than your take profit. So say, for example, in this case now, I want to calculate my stop loss. I click the price of the entry, which was here, above the box, about 6 pips, right? 6 pips. So I was risking 6 pips to make 25 pips. You see? That's how you use the price range tool to calculate pips, etc. So that is a very, very, very brief intro to how to use TradingView. And that's pretty much all you're going to need in terms of understanding what we're speaking about when we use terminologies like long, short, use a trend line tool, use a horizontal line. Okay, we haven't used a horizontal line, but simply horizontal line, all it is whenever you click the horizontal line tool and you click anywhere on the page, it's going to put a line. Okay, that goes back all the way. Whenever you click here, you can click here, wherever you like, it's going to place horizontal lines everywhere. Whereas if you place a horizontal ray is just going to start from where exactly you click. So if I start from here, click right here, it's only going to extend it to the right. Okay, it's only going to extend it to the right. So that is a brief introduction on the tools that we use on a day-to-day basis on TradingView. And now the next video, let's get into it. Let's get straight into the analysis and how to analyze a chart.